Hi, Hamish here from mortgagesonline.co.nz. So, big surprise result really with the elections for some. But I guess, a lot of changes on the horizon. How does it impact the housing market? Just want to talk to you about that. So one of the areas that were kind of similar is that both Labour and NZ First had some kind of they wanted to kind of directly get involved in supply of housing. So Labour, with its goal of delivering 100,000 new homes in the next 10 years, with 50,000 of them being in Auckland. And I think the way it was portrayed was that maybe they would get directly involved in this, so expected maybe a large build program that goes on. Now, what that may do, well, it'll increase the supply of probably entry-level homes, especially in those areas where there are large plots of land available for this kind of a build program. I guess expect to see building costs go up a little bit as well as building resources get diverted to these kinds of projects. That might lead to a little bit more price pressure in the more established areas around Auckland, where the buildings just, building doesn't happen as fast anymore. Not that it happens that quickly now, but there are a lot of smaller scale developers that operate in the market. Their costs may go up as a large building program gets underway. So I guess that's one big area of change. Another very interesting area is capital gains tax. So capital gains tax has been put aside for the moment, but we all know that if Labour get in for the second term, so after 3 years, most likely capital gains tax will be brought in. Now, most places where capital gains tax has come in, it has been grandfathered in, meaning that if you already own the investment property, it's off the table. It only applies to new properties that you buy after the change. Now, if we see that same kind of grandfathering of the capital gains tax, which is very likely, you may start to see people realise that, hold on, if we buy any rental investments within these 3 years, they may be tax-free for life, or capital gains tax-free for life. So you may see a bit of a mini boom as we approach, as we get closer to the next election, potentially. Apart from that, the other change really is that depreciation, most likely gone. Depreciation offset, meaning if you're losing money on paper on a property, and at the end of the year, you won't be able to move that over to your PAYE and get a tax refund. So with that in mind, probably I'm guessing you'd expect to see investors probably divert their attention more towards positive yielding properties. So properties where the purchase price, relative to the actual rent that's coming in, is a low purchase price, and the rent is higher. So, those are my thoughts at the moment. But thank you for listening. And again, it's Hamish from mortgagesonline.co.nz.